Good morning, folks. This is Naeem Azam, Chief Market Analyst at Avatrade, and welcome to our daily technical analysis video. In today's segment, we are going to look at the S&P 500, which is, without any doubt, is moving pretty much to the downside for the last few days. So we need to explore certain opportunities within this trend, and that is what we are really going to do. So before we do anything else, it is, as always, it is important for me to go through this disclaimer and risk warning. So anything which we'll be discussing in this video cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. Now, as always, I'm going to bring out the MT4 platform and we will begin the analysis by looking at the daily time frame. So on the daily time frame, what we have is three different moving averages right in front of you. First of all, it is your 50-day simple moving average in purple. Followed by that is your 100-day simple moving average. And finally, your 200-day simple moving averages. Now, in order to insert them on the chart, you just go to insert and then you go to indicators. From there, you go to trend. And then from here, moving averages right over here. And you can always change the period and color if you like, just the way that I have done. Just make sure that MA method is simple. The reason that I choose these particular moving averages is because they tend to work quite well on the daily time frame and they produce less noise. So generally speaking, whenever the price breaks above this particular moving average, that means that the bull trend is about to start, and whenever the price breaks below that, that means that the prices are likely to change their direction. So just like over here, I'm just going to point out on the chart right over here, as you can see, when the price broke below the 50-day simple moving average, what happened after that was obviously the price experienced a massive sort of sell-off. Now, similarly, when the price broke above the 50-day simple moving average, right around this particular area, what happened afterwards was that the price gathered more momentum and it continued from here to here. Now, if you're wondering that what about this particular move on the daily time frame, you will not consider that. The reason for that is because obviously these are simple moving averages with a longer period, so you won't get that signal. But at the same time, it will also help you to steer away from all the possible noise. Now, from there to here, what happened was prices were being very choppy, not finding any particular direction. Once again, the choppiness continued over here. But after that, choppiness, what happened in relation to prices was when the price crossed above that, we had another mini rally. So overall, we have two rallies, one a major rally and a smaller one is your mini rally. But one important thing which is happening with respect to the price action now is the price is once again, it is retracing back towards its smaller moving average, meaning the 50-week moving average. Excuse me. Now, of course, if the price retraces to this particular price level, that would be positive because this is where our support zone is as well, which runs from 3,545 to 3,588. Excuse me. Prices can certainly retrace to these levels, and as long as the price stays above this particular area, this particular moving average, the chances are that we are likely to see a move to the upside. But overall, if we measure the sell-off that we have seen so far for the S&P 500 index, it becomes very clear that we haven't seen a sell-off like that in a very long time. So, for instance, let me show you. We had 1, 2, 3, 4, 5 days of consecutive days of sell-off for the S&P 500 futures. Now, the last time we had those ones were just in around 2000, early October, when we had 5 days of consecutive losses. It was back in 2020 on the 22nd of October. But remember, at the time when the sell-off happened, the price started to form a bottom, and after that, we've seen this massive explosive rally to the upside. Now, of course, the sell-off is not of the same magnitude as you can see from here, but because every time the price did did drop, the bulls were pretty much back on track to push the prices higher. Hence, we have these wicks which are very, very low, but meaning the prices went well above the lows of the day. So for now, onward for now, what is quite important is that we keep an eye on our support level, which is right over here. And in terms of resistance, I wouldn't budge anything less than all-time high, or even up to 3,800 price level. So that is pretty much what we focus on. All right, folks, that's all for today. See you guys next time.